Hey y'all, how's it going? I'm trading the ES futures on a 2000 tick chart with a 21 EMA. So I've got the overnight highs up here and the overnight lows down here. These are our key levels for the day. So I started trading in this area right here. This is 8 o'clock Central Time. So we have this push down here. We have this leg, break, second leg down, which is when I started trading during the making of this second leg down here. We find resistance down here. This swing is before 8:30 here. It's in our pre-market session. We make that double bottom. We have this push up higher here, then break. We start making that second leg up. And then before we complete this second leg, we have this failed second entry that forms. We have the first entry short, second entry short, failure. Now, I don't like this entry right here because of a couple reasons. So one of them is that you have this measured move right here and you've already almost completed it. And one other thing about this is on a failure, you want to trap trade. You want to enter where people are getting trapped. You want to enter on their stops, right? And so when you have this signal bar right here, notice how it ticks lower than this red bar right there. So what you want to see in a trap is all of these shorts piling up right here. They're all adding to their short position under this red bar. It ticks lower and they're trapped into the trade, and then you want to enter on their stops, right? And it stops them out. So when it stops them out like that and then it just rushes back down, more bearish than it is bullish, it's basically a near, not quite, it's not like a doji because it's not quite in the middle there, but it's a little bit more bearish than bullish here. That's not a good sign for a trap, and so that just means that the trap wasn't significantly strong. It could just be that there's traders wanting to make a new low for this downtrend. We have this downtrend here. Those two legs eventually form one leg down. We have this, these confirmations off this trend line right here. Downtrend, break, first attempt lower, second attempt lower. It could be traders trying to make an equal leg to this down or make a new low. And so when you get a trap like that and it just, it stops them out and then it just rushes all the way back down, that means that there's indecision in the market. It's not very clear. You want to avoid it. So then here we're going up. We have these three touches right here. Drag it to these highs. We bounce off here. We're going up. We push off the EMA. Even though it's not a clear entry, it still works out. We get these small corrections that don't quite reach the EMA. Then here we reach that high right there. Then we have this first entry long. You don't want to enter on that. It's not even just that it's a first entry. It's also with the trend line rules. So when you come off one side of a trend, or this even applies to ranges as well, but when you come off one side of a trend, you want to see price make two attempts to reach the other side. It doesn't have to reach the other side before you can enter along with it. But when you come off one side of a trend, you want to see two attempts to reach the other side before you continue with that trend, because that's how price moves. Second entries form based on moves of twos. The market moves in twos. And so that's just how it is. When you come off one side, you want to see two pushes to reach the other side before you continue long. Otherwise, you'll often get trapped. Notice how after you get that first leg down, you go a little bit higher. After those two legs, you go significantly higher. Not that there's a good entry right here to go long. There's not. But that's just my point right here. And so this also applies to ranges. When you come off one side of a range, you want to see two. You don't want to just enter after one attempt to reach the other side. You want to see two attempts to reach the other side before you continue back in the other direction. So even when you're in an uptrend, you don't want to go long after one push, one attempt to reach the other side after coming off the highs. Anyway, so we're going sideways here. We have these two legs down. There's, you're closing all the way up in this, with this bullish bar, you're closing up at these highs. You don't want to enter directly into that. It's just forming resistance. This is a sign of a bearish imbalance in this range, meaning the bears are taking control, just can't get past a certain level. You got that triple test right there. You push off of it. And then, so here you have this leg down. You can see that second entry, it ticks higher with this bar right here. You see first entry long, second entry long. And you can say you're fading this range. It did just have a very sharp push down, and then on this green bar, it clearly rejected that range right there. So that's one concern. But it's also really just one push down right there. There's barely any separation between the legs. It's just one sharp push down. We retest that level again. We push lower here. Now we have these two legs down. Notice these blue arrows here. So first entry long, second entry long. You can view this as a bigger picture, two attempts for this downtrend. So now you can see downtrend, break, first attempt lower, second attempt lower. Of course, it gets even bigger as more time goes on. But we have those two legs down. Now, there's a reason I don't like going long here. Even though after you get these two legs down, you're retesting the overnight low right here, and then you get this green bar right here. At first, of course, this bar, that's no good. That's just closing right in the middle. Then after this bar, you might say, oh, I want to enter long here because we just retested the overnight low. Now, the only problem with that is we just formed a bearish imbalance. So we, in this whole range right here, we couldn't get past this level right here. We formed a 1, 2, 3 triple test and then had a strong push down. And so that's sign of a bearish imbalance. You don't want to enter long, under the EMA in a situation like that. You want to wait for a price to actually reconfirm above the EMA, which is what this is here. So notice how you can, to the tick, you can see first entry short, second entry short, failure. I really just viewed it as a big picture higher low because you see that higher low right there. I waited for it to close above the EMA. I needed a limit order so that way I don't push it past that, this level that's forming the bearish imbalance here. But it's a higher low. After these two legs back, it's reconfirming above the EMA and this range low right here, this price level. And so that's telling me that this bounce off the overnight low was significant. It's managing to push through this resistance and hold and give an entry above it. That's why I like that trade. Of course, I need a limit order to get out before these highs right there. And it scared me a little bit here when it bounced off. A couple got filled at first, but then it pushed lower here, and then the rest got filled up here after we ticked through. So anyway, we push off of it here. Now, someone went short right here and was asking about it, and it is good. I missed it because it was immediately after this trade. I got filled on my target, and then, usually I lose focus for a bit after each trade. That's just how it is when you're focusing on the trade. You lose focus for a few minutes. And then right after I got out of this trade happened here. Now, I only like this trade after we clearly closed below the EMA because we were forming a bearish imbalance right here. So when we react to that level very strong and we push below the EMA, this looks like a good limit order trade. You just ride it to the other side of the channel. And that one's pretty easy. You see, got the two legs up here. We have this first leg up, break, second leg up. We had a couple. Notice how we have this push up here, break, and then this push up here. So that's two attempts to reach that measured move. So we have this measured move in play. First attempt to reach it, second attempt to reach it, bouncing off this major level, pushing below. That's a good entry just to ride to the other side of this range. You don't want to push it out of this level, but given that bearish imbalance, this is good context for a short right there. But once again, after it closes below, and then use a limit order there. So anyway, we push lower here, and then we bounce right here, and then it's pretty clear that we're going into this uptrend right here. So notice there's 1, 2, 3 bounces right here. A trader was asking me about this entry right here on the website. There's a reason I don't like going long right here, and so at this point, so remember how we had this triple test over here, 1, 2, 3. Well, on a bigger picture, you see how you only see wick right there, but then you actually see the bodies confirming right here. On a bigger picture, I see this triple test, 1, 2, 3. This is a bigger picture triple test. I'm not counting that wick right there. I'm only counting these bodies. So this is a bigger picture triple test with this bearish imbalance, and then you push down very strong like that. And so when you get a long right after a strong push down, especially it being a triple test, that's important. That's those lead to very strong moves, and you already know you have a bearish imbalance. I'm not going to enter into the EMA like that. Even if you have this right here, notice how we overshoots lead to breaks. It overshoots this small channel here. It can lead to a break. I'm not going to enter long based on that. I'm not even going to take it because of that trend line here, because the overall context says we're in a bearish imbalance. You just bounced off this major level right here and had a strong push down. I want to wait for price to actually hold above the EMA and confirm before entering long again, because this is just, it's been sideways all day, but overall in this larger range, we have a bearish imbalance going on. So that's why I avoided that right there. We push up here. We have a couple legs up here, and then we correct, and then only after we held back above the EMA here did I like this right here. Notice we have first entry short, second entry short, failure. So it's a failed second entry. It's reconfirming this price level right here, this range low. You're pushing above the EMA here. I need a couple tick limit order there because I didn't want to push it too far out. Just like over here, at first it was screwing around with me. It didn't, really fill all my orders there until it had that second push. It was even worse right here. We push all the way back lower here. But if it's a good trade, it's likely to make it a tick past a range high right there. But once again, I didn't want to enter like this because you know, if I entered like that, I actually would have been stopped out clearly. And that's because you're pushing it into a very strong level that's been forming a bearish imbalance the whole day. So that's why I use a limit order on stuff like that. You don't want to push it too far out of resistance like that. So where was I? I was kind of getting lost here. So after that failed second entry, it's reconfirming this price level, reconfirming above the EMA. That's when I would want to go long. You don't want to enter long on a trade like that right after a strong push down, after coming off a very strong resistance level. It's just too risky. Wait for it to reconfirm above the EMA and above this price level. So anyway, we push up higher here. Notice we have this first leg break, second leg. We reach that measured move. We reverse back down. We have this right here, this uptrend. And then I don't like going long off of it because, once again, we just reconfirmed this level here. So that's why I was concerned about this trade, because of how strong the bearish imbalance is forming. And so then when we reconfirm it again and we just push right off of it, I'm not going to go long inside of this downtrend right here. And then even when we get this break and we push lower here, it's still into that EMA. You got to be careful with that EMA when you got a bearish imbalance like this. Notice, this time at first, over here it managed to get through, but this time it doesn't work out like that. It just bounces straight off that EMA and plummets down. So we push lower here. We break out of the overnight low. We retest it right there. There's no way to get short on that because we don't reach the EMA. We push lower here. We just keep pushing lower without reaching the EMA. Then here we get this push up to the tick. You can see that second entry. That's really just one leg up to me. Notice how we're forming this uptrend here. Break, new high. We have these two legs up. And before I started making the video, this is exactly what I was hoping to see, is two legs up, trying to retest. We have this major measured move in play. What I want to see entries to actually reach this measured move right here, but I'm done trading for the day. I mean, maybe I'll stick around for a bit after this video, but we have this first attempt to fade, break, second attempt to fade, and we barely didn't reach that overnight low right there. We came within a couple ticks of it, but we basically retested it right there. First attempt to fade, second attempt to fade, failure. We rush below we just shoot below here. Ideally what you'd see is a clear reversal pattern, but given with this bigger measured move in play, you have this right here. It looks measured. Let me just confirm that. So yeah, it's measured. We have this, it's reached that measured move. We push lower here. I do think this lower high here looks good given the context. It's been bearish all day, which I should check for this. So we didn't quite reach that, but that doesn't really matter. So anyway, we failed to fade, two attempts to fade, and then you get this lower high, very strong push below the EMA right there. I do think that looks good for 1-to-1. I wouldn't do it more than 1-to-1 though, because let me get this drawn here. So the reason I don't want to do it more than 1-to-1 is because notice how the resistance is right in that area where your target is at 1-to-1. So you don't want to push it past 1-to-1. You don't want to do 1-to-2 on that. And also it's a sharp move down, and you know that you're entering. It's not like you're entering with like a deep pullback. You're entering after it's pushing down. You're entering into this move down. So you don't know how far it's going to go necessarily, especially with that resistance right there. So that looks good for 1-to-1. Anyway, you've got that big measured move in place. So just thought I'd go over that. And we push lower here. We're kind of going into a bit of a range right here. Oh, whoops. We have this first leg up, break, second leg up, second entry right there. It doesn't reach the EMA. And then we retest here. We have this push up here at the EMA. What I'd like to see is a clear push up, break, and then maybe a second leg up right here, holding on the EMA. Or another good possible entry for today would be if we get a break right here, we have a second leg up, and then we get a reversal pattern back down below the EMA, holding below, because we still have plenty of room down to this measured move down here. So we can still definitely get shorts if we stick around. But anyway, so thanks for watching. I hope this video helped in some way, and I'll see y'all next time.